Hello and welcome to this session brought to you by the Academy of Practical Accounts in conjunction with your institution. In this session, we'll look at the profit and loss account. The objective is to be able to identify a profit and loss account and get some understanding of its composition and computations. So in this session, we're going to look at the source of figures, which is the final trial balance report C1, and then the individual and group notes to financial statements. Let's get straight to the device. Now remember that up to date, we have recorded all sorts of documents. We've recorded incomes, expenses, mainly incomes and expenses revolving around the payment accounts, the paying accounts. That's a cash, bank. We've used the credit card. We've done some loan repayment, credit card repayment, and a few other transactions. Now we are in module 2, which is miscellaneous, and we need to look at the profit and loss account. So this is available via the year-end reports checklist, but for this course, we're only looking at the mini year-end reports checklist. So we double click this, and then we need to get to report B1, which is the profit and loss account. So this is our B1, the profit and loss account. Now let's pinch a little bit to be able to see each and everything, and let's expand our display to the biggest possible. Okay, that's good enough. Now we need to pinch a bit. Let's pinch to see more of this profit and loss account. We can now see everything. Hope it's not too small. Okay. Now, what we start with is the most recent year. We've got the most recent year, we've got the previous year, we've got the change amount, and we've got the percent change. For those who are able to utilize this information, it is available. Now, following the simplified requirement of the Revenue Authority, we are able to generate a profit and loss account by clumping all expenses into one, and they're all found on note 3, and as you can see, the rest of this below is blank. That means you don't need to be a professional to classify expenses. You only require a simple skill of being able to differentiate between an income and an expense, and that is all. The rest you can ignore. So this detailed classification of expenses is not required for small businesses in the UK. All right. So we simply have the turnover, which is the sales value, and we have the cost of sales. Now, turnover minus cost of sales gives us the gross profit. And because there are no other expenses, then the gross profit is equal to the net profit. And the net profit in this case is 14,403 and 50 pence. Now you find that the gross profit margin and net profit margin, we shall ignore that. We try to keep that out of our module. Now for the previous year, basing on the information and the figures recorded, the turnover was 31,100. So the change between the previous year and the most recent year is 2,282, and it's a 7.34% increase from 31 to 33. Okay, now the cost of sales increased from 14,000 to 18,979, which was an increase of 4,929, and that was a 35.08% increase. So what happens is this person who is not a professional accountant is put in position to present this information. It has been automated by the software, and your role is to present. Whoever is interested and can interpret will make use of this. that's about it, because we only have the turnover and the cost of sales. So we end up with a gross profit, which is equal to the net profit. Now you realize that the change in gross profit is the same as the change in net profit, simply because we only have zeros below here. And that's about it. That's about it. Now, where do these figures come from? Okay, now let's go back. We need to go to C1 and confirm if these figures really come from C1. Remember, we said that this is the year-end comparative trial balance, where we're able to compare quarterly balances and then which are summed up. Okay, let's have a quick look. Oh, clicked the wrong one. Need to go back. Double click on the mouse, goes to the wrong one. Now let's click once. So these are the quarterly balances, starting from balances brought forward up to the fourth quarter, and we end up with a grand total. Now those grand totals are the opening balances on report C1. So these are the year-end balances. So we add the year-end adjustments to get the final balances. Now let's try to print screen the final balances. Print screen the final balances. It shouldn't appear that they have been generated elsewhere. We should be able to prove that. So let's bring it close this way. So those are the final balances. Now we should go back onto our profit and loss account, because we need to verify properly the source of these figures. Now we are saying that figures that end up on report B1, which is the profit and loss account, that is part of the financial statements, come from the final trial balance, which is report C1. And you can recall we have just taken a screenshot of C1. Now 33,382 agrees with that one. 18,979 agrees with that one. Now that 1,500, yes, yeah. Now that 1,500 is added to the minus 1,500, and we end up with a 0. That's why we don't see it there. And then let's see this 1,500 below. Okay, the rest below here are for the balance sheet. So what we have for the profit and loss account is only these 4 balances, final balances at the top. And that's what we have here. That's where those figures are coming from. Now, if you want to have an individual look at each of the computations, how do we get the 33,382? By the way, before I forget, gross profit is simply turnover minus cost of sales. We get gross profit. Now, gross profit plus 0 income, 0 other income, gives us that figure, and that figure minus the total of indirect expenses gives us the net profit. So because there's nothing this way, we're only looking at this. Effectively, we're looking at a 3-line profit and loss account, whereby we have turnover, we have cost of sales, and then we have the profit. As simple as that. And of course, we compare with the previous year. That's about it. Now let's have a deeper look at each of these figures, the 33,382, which balances constitute this. So we double click, we click on one, and that takes us to this summary of accounts on F2. F2 has got the detailed accounts for income, the detailed accounts, and we shall get to it when we click this blue title here. So this is report F1. Now it's supposed to show all the balances for accounts 1 up to 10 on a quarterly basis. Now, if you recall, we only recorded transactions for the fourth quarter. and that is why we don't have anything incomes don't normally have balances brought forward. If there is anything, it should be brought forward in the first month and the first quarter. So we don't have transactions for the other 3 quarters, and we only have something in the fourth quarter that makes up the total. And apparently there is no year-end adjustment regarding these incomes. So whatever is recorded in the fourth quarter ends up there. Now, beyond that, we go to the detailed accounts. In this case, it's only one account, and that is account 5. Remember, all income is recorded on account 5. So we click this and we end up onto account 5 that is found on report F2. Now we shall be looking at the mini year-end reports checklist to see the relationship. Let's have a very quick check on these mini reports. Okay, so these are the mini year-end reports. We're looking at F2 as an only report among the incomes. However, the software generates a lot more, although we are just picking on a few that a small business should present to the tax authorities. If there is need for more is available. We have up to about 80 something reports. 80 something. 65 of them are automated, and then the others require small adjustments and reconciliation. So this is report F2. Sorry, now this F2 here, we can see the 33382. It should agree with that one there. And this one used to be a challenge when we used to do it manually. It's now automated. So in these accounts, we find all the income generated by the business. Now, anything to support beyond this are the document numbers, which are found on the documents file that should be stored for up to 6 years. Ideally, the tax authorities should be in position to check the records for between 0 and 6 years. After that, the records can be thrown away. So this is the source of that 33382. How is it generated? That's how it's generated. You simply add up these. And if you need to query that 33,000, where does it come from? You should check document number 2. And that's how it is. So whatever is presented in accounts should be supported by documents. Okay, let's go back to our profit and loss account. Now we need to have a look at this 18979. Where does it come from? This is a summary of how it's computed. So that is note 3, the cost of sales. Cost of sales. Now remember, these are broken down notes, what we may call individual notes, and we also have group notes. You print one report that supports all the balances on the financial statements. The financial statements, we're looking at the profit and loss account and the balance sheet. All right. Now, these are the balances on 3 accounts. Now we can ignore the lower one because this is got 0. So we've got 3 accounts. We've got account 21, we have 25 and 41. Now the balance on 21, the year-end balance on 21 is 1500. This is which account? This is account 25. Account 25. By the way, we can tilt our device. Let's rotate this device and probably see more. Yeah, we're able to see a little bit more. Yeah, on account 25, the balance is 18979, and then account 41, the balance is 1500 negative. So that one plus that one is equal to a 0. So effectively, we only have that balance. Now, let's look at G3, which is the detailed accounts for report G3. Now, we need to turn off the internet. Just 1 second. Turn off the Wi-Fi. Okay, should continue. All right, now let's look at the detailed report. Beyond this one, how do we generate the 1879? 18979. Double click that, and this is how do we move it to the left? We can't. To the right, we can't. There we are. Anyway, so this is the stock and materials account. This is account 21, opening stock. This is 25, all expenses, and this is closing stock. Remember, all expenses are recorded onto this account. This is the simplified accounting format whereby you don't need to learn to classify expenses. All you need to know to differentiate is an income and expense and an expense period. Now the rest, all incomes are recorded onto, all expenses are recorded onto this account. And the only difference we create is the narration. This was a mobile bill, these are bank charges, this is resale stock, this is faulty stock returned, this is a transport refund, what we may call mileage allowance in the UK, and this was a purchase of a laptop. Remember, with this cash accounting system, fixed assets like a laptop are written off in the year of purchase, provided they are used for only 2 years. Yeah, that's the detailed report regarding the 18979. Remember, that one plus that is equal to a 0. Well, that brings us to the end of this profit and loss account. Where do the figures come from? Now, maybe what we need to do is to look at the notes. The notes. Now, we looked at individual notes. Now, let's look at the notes to financial statements quickly. Now, that is report B4, notes to financial statements. Now, we are going to find, let's compare this with this one here. Now, these notes also have a provision for comparison. You remember we recorded previous year figures. They have a provision for comparison. Now let's see, all income is 33. This is the most recent year. Previous year was that, and this is the change amount. And that is the change percentage, 7.34%. Now opening stock, there's nothing to compare with. All expenses in the previous year, 14,050 was spent. The most recent year, 18,979, a difference of about 5,000, and that's about 35% increase. 35% increase. So these are the notes to financial statements. These are the grouped notes. All of the notes are found here. That is the notes to the profit and loss account and notes to the balance sheet. Now let's have a look which report should show that. I'll show you briefly. Now the notes to the profit and loss account, they should end at not. Let's see. I think it's not 16, because not 18 and 17 are fixed assets. That's right. And because we don't have fixed assets, they're not displayed here. So what is up here are the notes to the balance sheet. And if you're not satisfied with these summarized notes, then you click on report F2. That's why it's prepared. We try to compress information as much as possible. So from these notes, the next summary, from notes 1 up to 16, the next summary is the profit and loss account. And then notes 17 up to note 30. Up to note 30. The next summary down the line is the balance sheet, which we shall be looking at shortly. Well, that brings us to the end of this session where we've had some look at the profit and loss account. We should be able to identify this report. Now, wait, this is not the profit and loss account. This is the notes to the profit and loss account. The profit and loss account is this one. Okay, it should have the turnover, cost of sales, should have the gross profit, and then probably net profit at the bottom. It's aimed at computing the profit generated by the business. Thank you so much. In case of any issues, please send us an email, find us on Skype or via WhatsApp. Thank you.